Good morning, everybody. This is Chrisi from Solstice ATR and Vulcan Capital Research. I hope everybody's enjoying their weekend. Let's take a look at the overall market. I have the combination of the four instruments, and what I'd like to say that last week was very bearish. The market has changed trend possibility. The reason why is by basically taking a look at the S&P, the Nasdaq, the Russell, and the Dow. And if you notice, the small cap is the canary in the coal mine that had been a little bit on the weaker side compared to the Nasdaq and the S&P than the Dow to follow. That week on Thursday, we had the week before down move. Friday, we came back up. After Friday, we opened up, from the coronavirus. And basically, it looks like that the bulls are shut off. What I mean by that is basically this candle took out the last 3 months till September, October, and this is the August. We came back basically to the below the 50%. We closed above the 116 simple moving average and the 50 fib. What I'm thinking, if we can come back 1/3 of the move or halfway back and come back down, this will create like a shoulder and head back lower. I would like to get an opportunity for the market to come down a little bit further on making sure that the market goes back up before continuation. If we clear the 61.8 fib, we can continue higher. What I'm going to do is change this to a daily chart just to show you the overall combination. This is the daily. Let's just zoom in. We noticed that we took out this major support and this one from here, and we took out the 116 and the 200 SMA. On Friday, we hit a major support area. This happened in August, October, if you notice. This is the November range, and this is the August 15, and this is August 7th, and that's the August 5th. This was the trade war between the United States and Asia. Unfortunately, they said, you know what, we can work this out. They tried to do it again here, and eventually we took off. We had a nice rally from November, and we had 15 VPOCs above us, stacking below us, and we kept continuing higher. We reset a little bit, continued higher. This was the Thursday candle. This was the Friday, and eventually Monday, Tuesday, Wednesday, Thursday, we've got a couple of gaps. There's a gap here, there's a gap here, and there's a gap here. We noticed that we had 4 gaps above us. We've got 1, 2, 3, 4. 1, 2, 3, 4 gaps that we have not taken out above us, and we have 5 VPOCs above. So in order to retrace a little bit of this move, what I'm thinking is basically taking a look at the range from this area down to here, or this area to here. We can get a Fibonacci just to give you a better idea what I'm looking at, so you guys can understand why I'm looking for that 61.8, the 50%, the 38%, and the 61. If you measure it to here, the 38 is up there and it's at 40,890, and if I measure it down to the August lows, this is the lows in August, you can see that the retracement of the fib should be around the 200 SMA, the 38%. I'm just going to show it, and that's the 50. I would like to see it come back to the 38. If you continue and break above this channel, I'd like to see the 50 and retrace down, or if it continues above the 50, the 116 to the 61.8, this may act as resistance, because this is the last time we had this and we took off higher. If you notice those double tops in November 27th, and this was in December 12th when we went higher. We took out in 1 week and basically 2 days, we took out basically 3 month, 4 month worth of market return wiped out in 5 days due to the coronavirus. What I'd like you to understand is this. I'm not biased to being bearish or bullish. We traded to the short side after those gaps happened, because this is basically but the bulls are shut off and the sellers got in place, and the bears took over because it took over all these monthly candles and the weekly candles to the downside. So if the trend needs to change, this candle here, this hammer, where we found the support, which was down in this area. We came back to it exactly. If you notice, this low was 37,118.9, and this low down here was 37,050.75, and this one was 37,130.94. So did we get close enough to it? Of course we did. I mean, this is what I consider, a triple bottom. This area was a little higher. We came back to it and we closed right on this candle, which was the November 3rd, 8th area. If we can continue back up, I'd like to see it up here before we can come back down. If the coronavirus is going to cause a reaction in the international markets from the Asian, the Australian, the European zone, Africa, and South America, and Canada, and cause panic in the United States. Because this is funny. I mean, I went yesterday to Trader Joe, as well as this couple of Whole Food Market, Wholesome Food, as well as Trader Joe and Costco. Found out like everybody's lining up to get water and supplies, and everybody's panicking. Okay, that's fine. You guys gonna panic and cause a reaction. Last time, the Ebola and the Mexican flu killed more people than coronavirus. If this is an epidemic, then we have to watch out. If things do heal itself, nature's always have healed itself. This reaction maybe, month or 2 months, and eventually everything, is at discounted rate. We can, buy the lows and sell the highs, or do vice versa until the market changes. Let's go to the Russell one by one. I'll go break them down through /RTY. That's the small cap on the daily. If you notice, we came back to the same area. This is 1, 2, 3, 4, 5, 6. We came do it, and we came back very nicely and strong. The Russell came back up nicely to the upside. I'd like to see the Russell come back up to this area, because if we take this measuring tool again from high to low, I'll show you how it looks like. You can see that I had ovals on the Russell from before, and I had those little marks. I'd like to see, the 1500 and the 1545, and eventually the 1578, at least coming back to that area. And if we clear the 61.8, the 1610, this is back off to the races. But let's see what next week holds for us. So that's the Russell. Let's take a look at the NASDAQ /NQ. That's the NASDAQ. Okay. If you notice, I don't have a fib. If you take a look at the highs and lows of the NASDAQ, I mean, these channels are already no longer valid. So what I'm going to do is remove that channel, remove this smaller channel here. I should clean them later on, but I kept them on the charts from weeks before, when we were going higher. So we came up, we cleared this. This was the Thursday. This is the Friday of last week. And eventually Monday, Tuesday, Wednesday, Thursday, Friday. And we do have 2 gaps in the NASDAQ, because, a couple of times they tried to rally it back to the 1885, 1850. 8,050. So, and eventually we couldn't sustain it, and we fell down further. We lost the 50 SMA, the 116. We touched the 200 SMA, and this channel, look how perfectly it came close to it, and we came back to the major channel on the weekly and came back up to it. In order for the NASDAQ to fall further down, and what I'm going to do, I'm not going to go to the June area. I'm going to just go to the August area. August 7th, though, if I take a measuring tool from the high, which is here, we're just going to take a look at it normally, and we'll take it off, and I measure it down to here. If you notice, we came back and closed above the 160 SMA and the 50. The NASDAQ has further to go down compared to the other instrument. If the NASDAQ, which is, the tech sector, semiconductor, and technology companies do rally, keep an eye on the 50 SMA, to come back as a rejection. That would be the 50% of that move on that trade. Because if you notice, my chart did give me the support from November 3rd instead of the August. I measured it a little further down so I can show you where is a possibility of coming back to. or if I remove this and I just do it one more time to show you the Fibonacci down to the June area, where did we stop? We went below the 50 Fibonacci, touched the 200 SMA, and we came back to close above the 116 SMA. Is the NASDAQ strong? Possibility. Keep an eye on what's going on in the overall market. Trade what you see, not what you think. And remember, I'm a technician. I'm not going to analyze a company and come say, oh, because it sounds good and analysts are saying about it this and this, or the market's going up or the market is going down. I'm going to analyze my own trade and do what's best for us as a trader. You can follow us on Twitter, you can follow us on Discord, or you can check us out at Solstice ATR so we can help you for 2020 goals to trade either side of the market, upside or downside, without having your emotions involved. If I take a look at the daily chart on the S&P 500, it's in a similar situation. I mean, that whole week and 2 days from prior, we took out the November area. We almost got to this area. I wanted actually this area to be my bounce area, or the one down here. Unfortunately, we didn't get there. We U-turned, on that prior channel, and we lost that other channel up here. So is it possibility, can we go back up to the 50%? And if you notice, the S&P 500, the auto Fibonacci had retraced from the high and low, measured this one here for me, if you notice, from November 3rd. I'd like to see this Fibonacci measured from August. So what I'm going to do, just show you a little bit of difference, and just by drawing it, by taking a look at it till August, where is it? If you notice, where did we come to? We came back to the 23, went a little bit below it. I got an ADX DMI crossing above, 40 and climbing very fast. The RSI dumped in 1 week and 2 days, took out, all the buyers out of the market. Sellers, the buyers are shut off, and they pushed it further down. And we coming back to the 38% fib. I would like to see at least, coming back to the 61.8, the 50%, and the coming back to that 61.8 and the 50 fib. If we can come back to that 50% Fibonacci and continue, I'd like to see it up here. So if I remove this fib that I drew, remove drawing, so I make it a little bit clearer, you notice that's my support. That one is a 61.8, which is a 38.2. If we draw it the other way around, this would be the 50, and this would be the 61 instead of the 38.2. And what I'm going to do is take that here and measure it down to here. So to show you the differences, how it's just inverted. So the 61 would be here in the 38. I'd like to see this coming back to the 38 in this channel that we lost in the 200 SMA, back to the 50 fib and the 116 SMA. If it can continue, that's great. That was my old oval here. We had it here. We still got 4 overnight actions that are gaps in here. We have 5 VPOCs above us. We took out all the VPOCs that were stacking, from here, or from the November area all the way up. We had about 15 of them. We took out most of them. We still have one down here, which we have not revisited. So in order to continue higher, which is this one here, this is from the June 3rd. I'm not going to look at it. I'd like to see a retracement in the market to continue higher. So I'm going to remove this step. Understand we have this channel here and this channel, that we wiped out. I'm going to keep this here because it's around the 200 SMA on the daily, and see what the market gives us. So if I'm going to go back here from style, I would like to go to the monkey bars to show you guys something which is very important. If you notice, this is a 3-month daily. If I go from the daily 3 months and I go time frame, and we go out to 3 years, and just push from daily to weekly, I just want you guys to see something on the charts. So I mean, we got a nice push up. This is from beginning of the year. This is that's a virgin control point. If we gonna come back to this area, that's gonna be very critical. And we have this is on the daily chart, but if what I do, if I go from weekly, go time, instead of 3-year weekly, I just go to daily, and just instead of putting it on weekly, go to daily. It'll show you a different scenario. The ranges are wider in these pucks, you know, value area high, value area low. Where did we come in? Inside the value area high, and we haven't visited the POC. But if I come back here, go back time frame, go from intraday, go instead of daily, we're gonna go here from daily to 180 days. And we're going to go, instead of that, we're going to go to 4 hours and push OK. You can see that this whole move from the top coming back down, where are we? We were as low as 28.42. If I come back to the left, if you notice, this is we took this area out. We came back down to the 3100. We came back to the 3000. This is coming back in. We're still coming back in. We're still coming back down. Here's the area that we came back to the 2900. There's the 2870. This was the November area that we took out, correct? In the trading, we came back to the 55. This area has to act as support, continue back up in order to retrace. And these are the pucks that we had. And if you noticed, we went lower, and this is the area that we have to keep an eye on. The 28, if you notice here, this was the consolidation which we came back to. I'd like to see this as act as support. This is the August one. You notice it's 2800. I'd like the 2800 to hold. If it doesn't, it's 2775. We go further down. And this is the area that we have a virgin control point, which is the consolidation before continuing higher. So if we come back to the July, and that's then we can come back down and a little bit more, Come on. Okay, it didn't go as further as I want. I should have done it a little bit longer. I only did a 6-month on it. So if I go to daily, go time frame, instead of 180 days, we go to 360. We can continue. We're going to see on the other side more of that reaction. You know, we went too far out here. There, 28, 26, 24, 23, 26. Okay. This is the area that I would like, you know, that the market to come back to and eventually bounce back up, because we had a lot of consolidation in this area before we continued higher. So if I take this back just on a weekly basis, go to time frame and go, instead of intraday, let's just go 20 days. Instead of 4 hour, we'll go to an hourly chart and push OK. If you notice, we have all these areas. That's a POC, that's another POC, that's another POC, and another POC. So we have stacked 5 POCs above us in order to continue. And this is the close on Friday. If, you know, the Federal Reserve Board in the international markets such as Asia and Europe decide to help the economy by boosting more, the plunge protection team come in and help us look for the 50% retracement before you do anything on being super bearish, because this can snap back and go back the opposite way. But if we continue, look, you know, for that value area low, you know, that 1775 area, that would be my first zone to really buy, to do a test in this area, because I'd like to see that happen, because that's where the value area low is, in order to go back and retrace a little bit further. Are we at a discounted rate? Of course. I mean, the stocks are cheaper, but can they go further and bleed? Yes. But what I want you to understand is trade what you see, not what you think. This is the value area high, value area low. And this is your POC. This is where most sentiment was spent. This is the value area high of it, value area low. We're going to look for the most time that's spent and where the POCs are in relationship, where if we are above the value area high or we're below value area high. There's three ways of trading the volume profile. If we're coming from the bottom, we're going to try to fill the gap. We're going to look for the value area low. If we close inside that value area low on the first 15-minute bar, possibility of continuation to the POC. If we reject the POC, we come back down. If we continue through the POC, we look for the value area high from the bottom. It's vice versa coming in from the top. If we gap up, we come back to the value area high. We bounce off it. That's continuation to the upside. If we go through it and we close inside that 15-minute, it'll go to the POC. Eventually, if it supports it, it bounces back up. If it goes through the POC, we look for the value area low. Or scenario 2 or 3 would be if we gap up in continuation, we gap up continuation to the downside, or we gap up or down. Let's say we gap up and we go sideways, that's building value. If we gap down and we build value in that area, they don't continue lower, that's where most value is. So remember, once again, trade what you see. Check us out on solsticeatr.com or on Discord and ask us how we can help you in your trading and your goals for 2020. I know a lot of the accounts and retirement accounts are basically bleeding. If you are holding large positions, in your retirement, preserve your capital. If you're going to be retiring in the next 4 to 5 years, don't be biased to being super bullish because the market can make you solvent. You're not solvent as the market is. So take care. Look forward to seeing you and have a wonderful week. Take care.